Have you noticed the recent surge in NIO's stock price? What could be behind this sudden increase? Well, it seems that NIO, listed in Hong Kong, has recorded a significant growth of 23%, reaching a high of 44.2 Hong Kong dollars. This is the highest it's been in over 6 weeks. This surge didn't go unnoticed in the broader market either. The Hang Seng Index, a significant barometer of Asian markets, was positively impacted as well, seeing a 2% increase during midday trading. Now, you might be wondering what's driving this upward trend. Is it simply a fluke? Or is there something more substantial at play here? Well, that's what we're here to unpack, so what's fueling this impressive performance? Let's delve into the numbers. According to NIO, they delivered a total of 15,620 vehicles in April, a staggering 134.6% increase from the same period last year. Let's dive a little deeper into these numbers. The 15,620 vehicles delivered include 8,817 premium smart electric SUVs and 6,803 premium smart electric sedans. That's a lot of electric vehicles hitting the roads. Now, if you're wondering how this stacks up with their performance so far this year, NIO has delivered a total of 45,673 vehicles. That's up 21.2% compared to the same period last year. So not only is NIO delivering more vehicles, but they're also doing it at an increasingly fast pace, which is impressive to say the least. Now let's not forget, these figures aren't just about the number of cars NIO is selling. They're also a testament to the company's capacity to manufacture and deliver high-quality electric vehicles. That's an important factor to consider, especially in a market that's becoming increasingly competitive. But NIO's success isn't just about vehicle deliveries. The company is also expanding their battery swap partners to gain an edge in the electric vehicle ecosystem infrastructure. This is a smart move by NIO. By partnering with other companies for battery swapping, they're not only streamlining their own operations but also contributing to the broader EV infrastructure. This could potentially give them an advantage over other EV manufacturers who are still grappling with how to handle battery swapping and charging issues. In conclusion, NIO's recent delivery figures paint a picture of a company that's not just surviving in the competitive EV market, but thriving. They're delivering more vehicles, expanding their infrastructure, and showing no signs of slowing down. It's a fascinating story, and one that we'll be keeping a close eye on in the coming months. Meanwhile, other Chinese electric vehicle manufacturers such as Li Auto, XPeng, and BYD also reported their April delivery figures. Li Auto delivered 25,787 vehicles in April, a slight decrease of 11% from March, while XPeng reported a 4% increase with 9,393 electric vehicles. BYD's electric vehicle sales reached 313,245 in April, a 3.6% increase from March. But it's not just about how many vehicles these companies are delivering. It's also about the fierce competition brewing in the Chinese electric vehicle market. The Chinese EV market is a battlefield where only the strongest survive. The competition is fierce, with every manufacturer vying for a slice of the pie. And it's not just about the number of vehicles delivered, it's also about the technology, the customer service, and the overall brand appeal. Tesla, with its aggressive pricing strategies, has been a significant player in the Chinese EV market. They recently reduced the starting price for the Model 3 in China and other key markets. This move is aimed at capturing a larger market share and fending off competition from domestic rivals. But Tesla isn't the only international player making waves in the Chinese EV market. Xiaomi, a new entrant, introduced its own electric vehicle at the beginning of April, priced lower than Tesla's Model 3. Xiaomi claims that their new vehicle will have a longer driving range. Just a week ago, Xiaomi's CEO Lei Jun announced that their electric vehicle is selling better than expected, and the company hopes to break even sooner than predicted, despite pricing it lower than Tesla's Model 3. With aggressive pricing strategies from Tesla and the entry of new competitors like Xiaomi, the competition in the Chinese electric vehicle market is heating up. Tesla recently lowered the starting price for the Model 3 in China and other key markets, while Xiaomi introduced its own electric vehicle in early April, priced lower than Tesla's Model 3. The stakes are high in the global electric vehicle market, and these two giants are making calculated moves to secure their share. Tesla, a pioneer in the electric vehicle industry, has always played a major role in setting the market's direction. Its decision to lower the Model 3's price is a strategic move to appeal to a broader consumer base, making electric vehicles more accessible to the masses. This could potentially spur an industry-wide price reduction, pushing other players to offer more affordable options. Xiaomi, on the other hand, a newcomer to the electric vehicle market, has launched its own EV, priced lower than Tesla's Model 3. This price point, coupled with Xiaomi's reputation for quality tech products, could make their electric vehicle an attractive option for consumers, particularly in China's burgeoning middle class. Adding a cherry on top, Xiaomi claims that their new vehicle will have a longer driving range. If true, this would be a game changer, as one of the main concerns for potential EV buyers is the vehicle's range. This could be a significant selling point for Xiaomi, giving them an edge over competitors. Just a week ago, Xiaomi CEO Lei Jun said their electric vehicle is selling better than expected, and the company hopes to break even sooner than predicted, despite pricing it lower than Tesla's Model 3. This is an encouraging sign for Xiaomi, and a testament to the growing acceptance and demand for electric vehicles. In the grand scheme of things, the moves from Tesla and Xiaomi are shaping the electric vehicle market, influencing pricing strategies, driving range expectations, and overall competition. Their actions are not just about securing their own market share, but about propelling the entire industry forward, making electric vehicles more accessible and appealing to consumers worldwide. And that's the story behind NIO's stock surge and the fierce competition in China's electric vehicle market. NIO, a company listed in Hong Kong, experienced a significant rise of 23% in its stock value, reaching a 6-week high. This is largely due to NIO's impressive delivery numbers, with a reported total of 15,620 vehicles delivered in April, marking a staggering 134.6% increase compared to the same period last year. But the landscape is not without competition. With aggressive pricing strategies from Tesla and new entries like Xiaomi, the Chinese electric vehicle market is heating up. Tesla recently reduced the starting price for its Model 3 in China, and Xiaomi launched its own electric vehicle, promising a longer driving range. So as we watch NIO's stock continue to soar, we also keep an eye on the dynamic and ever-changing landscape of the Chinese electric vehicle market. That's all we have for today's analysis on NIO and the Chinese electric vehicle market. It's undoubtedly an exciting time for investors and enthusiasts alike as we witness the rapid growth of the electric vehicle sector, particularly in China. The remarkable surge in NIO stock is a testament to the company's strategic moves and its ability to tap into the market's potential. However, let's remember that the market is characterized by fierce competition, with players like Tesla and Xiaomi vying for a share of the pie. It's a thrilling race, and we're all eager to see how it unfolds. Will NIO continue its upward trajectory, or will the competitive pressures prove to be too much? Only time will tell. While we wait for these questions to be answered, it's important to stay informed, keeping abreast with the latest market trends and understanding the factors that drive these trends can provide valuable insights for investors and market watchers. After all, knowledge is power, and in this fast-paced, ever-evolving market, being in the know can give you the edge. So as we wrap up today's discussion, I'd like to express my gratitude for your time and attention. I hope you found this analysis insightful, and it has sparked your curiosity to learn more about the dynamic world of electric vehicles and the investment opportunities it presents. If you found this video helpful, please show your support by hitting that like button. Sharing this video with your network helps us reach more people and spread the word about the exciting developments in the electric vehicle market. And of course, if you haven't already, do subscribe to our channel to stay updated on the latest market trends. We've got a lot more interesting content lined up for you. Don't forget to hit the like button, share, and subscribe to stay updated on the latest market trends. Thanks for watching.